Filing taxes in Canada shouldn't feel scary, but for a lot of people, it does. Every year, Canadians either overpay, miss benefits, or panic because they don't know what the CRA is actually looking for. The truth is, CRA rules aren't complicated. They're just unclear. Welcome to Maple Money Talks. I'll walk you through 13 real CRA tax situations that affect everyday Canadians and exactly what to do in each one. Let's start with one of the most common fears. Missed the April 30 deadline? Take a breath. This happens more often than you think. Here's the key thing to remember. Late penalties only apply if you owe money. If you're getting a refund, there's actually no penalty for filing late. And even if you do owe, filing late is still far better than not filing at all. The longer you wait, the more interest can build. So the smartest move is simple. File as soon as possible. Now let's talk about refunds, because that's where most people get anxious. If your CRA refund feels stuck, don't assume something is wrong right away. First, log into CRA My Account and check your Notice of Assessment status. Next, confirm your direct deposit details. A small banking error can delay things for weeks. And if your return is under review, don't panic. Reviews are routine and very common. An audit is serious. A review is usually just CRA double-checking information. But what if the issue is actually a mistake on your return? Mistakes happen. Forgotten T4s, missed T5s, or deductions entered wrong. The good news? CRA expects this and they give you ways to fix it. You can submit a T1 adjustment, either online through My Account or by mail. Most changes take just a few minutes online. The key is acting quickly. Fixing errors early helps you avoid interest and penalties later. And sometimes the problem isn't a mistake, it's missing paperwork. If you're missing a T4 or tax slip, don't wait on your employer forever. CRA. My Account often already has copies uploaded. If the slip still isn't available, you can estimate your income using pay stubs and file anyway. The important rule here is simple. Never skip filing. You can always adjust later, but missing the deadline causes bigger problems. Next up, something a lot of Canadians don't realize until tax time. If you worked more than one job, this one's important. Each employer deducts taxes as if they're your only source of income. When everything is combined, your total income might push you into a higher tax bracket, leading to unexpected tax owing. This is extremely common and not a mistake. The fix is making sure all T4s are combined correctly and planning ahead for next year. Now let's talk about people without T4s at all. No T4 doesn't mean no taxes. If you're self-employed or working gigs, you report gross income first, then deduct eligible expenses. That includes things like home office costs, mileage, software, and equipment. And keep your receipts. CRA can ask for records up to 6 years later. Tracking expenses digitally throughout the year makes tax time much easier. But what if you didn't file at all last year? If you've missed filing for 1 or even several years, don't panic. CRA actually prefers voluntary compliance over enforcement. The best approach is to file outstanding returns starting with the oldest year first. This reduces interest, lowers risk, and often unlocks benefits you missed. The worst thing you can do is keep waiting. Now, let's flip the script. What if you paid too much? Many Canadians overpay simply because they miss deductions. RRSP contributions, medical expenses, tuition credits, these add up fast. And here's something people don't realize. You can adjust returns going back up to 10 years. That means real money could still be waiting for you. A quick review can turn past overpayments into refunds. On the other side of that, what if you owe CRA? Owing CRA money doesn't mean you're in trouble, but ignoring it can be. Common reasons include self-employment income, multiple jobs, or under-withholding. Interest starts compounding daily, so paying sooner saves money. If you can't pay in full, CRA offers payment plans, but you need to reach out first. Communication matters here. And sometimes CRA reaches out to you first. Getting a CRA letter can feel scary, but most letters are routine. They're usually asking for clarification or documents, not accusing you of anything. Read it carefully, note the deadline, and respond through CRA My Account if possible. It's faster. Reviews are normal quality checks. Audits are much more serious and far less common. Next, when the refund says processed, but nothing shows up. If your refund didn't arrive, bank information is usually the issue. Outdated details or closed accounts can cause failed deposits. Updating your direct deposit in CRA My Account usually fixes this quickly. If it converts to a check, expect a longer wait, often several weeks. Now, let's talk about newcomers and first-time filers. If you're new to Canada or filing for the first time, filing is incredibly important, even with little or no income. Your residency status determines filing requirements, not just income. Filing unlocks benefits like GST, HST credits, Canada Child Benefit, and more. Many new Canadians miss thousands simply because they don't file. And finally, one of the biggest myths out there. Low income doesn't mean no filing. In fact, it often means more benefits. GST, HST credits, Canada Workers Benefit, and a future RRSP room all depend on filing. A large percentage of eligible Canadians miss out simply because they assume filing isn't required. If your income is low, filing is usually even more important. Let's wrap this up. Canadian taxes don't have to be stressful. Once you understand how CRA actually works, fear disappears, and clarity takes over. Now you know the 13 most common CRA tax situations and how to handle each one confidently. If you found this helpful, follow Maple Money Talks for more Canadian tax tips, drop your question in the comments, and share this with someone filing taxes this year.